Hi. Hello, hi guys. Good afternoon. It's Kcfx. Uh okay, so who is here now?
Yes, good afternoon, Kcfx.
Okay,
Mari
great.
Kivio.
All right, great. So Infinix X6517, please can I know is this one? Infinix X6517. Can I know you are, please, so I can start? Okay, so can we start now? Other people joining, or I should start? Hello, Mr. Ike. Welcome. Good afternoon.
Yeah, Kisley, good afternoon.
Yeah, good afternoon. Okay.
Good afternoon.
All right, good afternoon. All right. Uh, Hi there, Uche. How are you?
Hi, I'm fine. Good afternoon.
Okay, great. Okay. So let's see if others will join us before I start.
Okay.
Let's see if others will join before I start. Okay, wait another 5 minutes and we'll start so we can push. 5 minutes and we'll start. Okay, Mr. Emmanuel, welcome. Okay, guys, good afternoon. Let's start now, please. Okay, today is 15th December 2024, okay? And I want to show us how we can be able to use my strategy to trade the market, okay, the Forex market, okay? So before I start, okay, I'm going to try to explain to us how my strategy works, okay? And in my strategy, okay, we have two phases that we work on, okay? We have the first stage or first phase and the second phase, right? Now, before I push forward, okay, I'm going to talk about the first phase, okay? Now, I'm going to give us the pairs which are already in the first phase, okay? So let me call the pairs out, right? We have the GBP USD, that's the pounds USD, GBP USD. We have the Euro USD, and we have the CAD JPY, okay? And the USD CHF, okay? We have those four pairs which are already in the first phase, okay? They are still working their way towards the second phase, all right? So the second phase pairs these are the USD JPY, okay? CHF JPY, Euro NZD, XAU USD, that is the gold, and the USD ZAR, okay? All right. Now, I'm going to right now. I know you're already seeing my screen. Okay, that's the USD JPY. Okay, I'm going to use this to explain to us how my strategy works. Okay, and also just a brief one. Okay, trading is hard. Okay, trading is really, really hard. No one should tell you trading is easy. That's a lie. Okay, so I'm going to kickstart with USD JPY. Okay. First of all, I'm going to break it down, break my strategy down using the USD JPY so we can understand. Okay. Just a moment. Let's see. Okay. So I'm going to open this. This one is already a setup which I've already finished. Okay. I'm going to clear all these drawings and setup which I've done, and I'm going to start from scratch. Okay. So we can understand how I came up from the first phase down to the second phase. Okay. All right. So I'm going to go to USD JPY. And I'm going to clear all this. Okay, I'm going to clear this and we're going to start afresh. I'm going to explain bit by bit how we start and how we get to our phase two where we take entries. Okay, so I'm going to clear, remove our drawings. Okay, great. Now you see we have a clear USD JPY chart. All right, this is trading view. Okay, I would also advise us, okay, to have an account on trading view. You can go on your Google Chrome and just type in trading view, and you can sign up with your Google account or any account at all, okay, to have like a user, like a profile on this trading view. Okay, so everything I'm doing here, you can as well do it on your own profile on TradingView. All right. Now, as I said, we're going to be starting with first phase of my strategy. Okay. And I used to say, okay, I trade just like the banks. Okay. Banks, they trade the way I do, but what happens to them is theirs is more complex. Okay, so I try to tweak mine so that it can be easy for us to use. All right. So, all right, USD JPY. Before you start working, okay, before you look for a pair to start, right? First of all, the first thing to do, you need to know if the market is in an uptrend or in a downtrend. That's the first thing to do if you want to understand my strategy, okay? You need to know if the market is going up, that's an uptrend, or it's in a downtrend, that's going down. At the moment, if you look at the USD JPY, you can see the market is in an uptrend. It's in an uptrend move, right? You can see that right from here up, you can see it's going up, right? The market is in an uptrend. So that's the first thing you need to know in my strategy, okay? You need to check and see that the market is in an uptrend. So right now we see that the market is in an uptrend. Now that's the first step of the first phase of my strategy. Okay. Now the second step you need to know again is now that you've seen that the market is in an uptrend. Okay, we need to now set up to know our higher high and our higher lows. When you have an uptrend, then you can be able to fit in your higher highs and your higher lows. Okay, on any pair at all, but we are focusing on USD JPY. All right. So now let's look at this pair carefully and see where we can put our higher high and higher low. Now, let's see. Let's look at it. Let's look at it together. Okay. Let's see. The higher high, okay, on this pair, right, will be from here. Now, this is a higher low, right? This is a higher high. This area is a higher high here. Okay. Okay, just a moment. Let me quickly check again. Let's be sure. Okay. All right. Now, our higher high should be here. Okay. Can put our higher high here, our higher low here. Our high high can be here. Okay. Can be here. Okay. This can be a higher low, right? Okay. Let me put this here. This is our higher high, right? Higher high, higher high, uh, higher low, higher low too. Just a moment. Let me just put in this in so we can really understand properly. I'm going to put it back in just a moment. Hello. Just a moment. Okay. Now, let's see. Higher high, higher low, and higher high. Okay. Higher high. Now, let me put it in so you can see clearly. This is higher low, higher high, higher low, higher high, higher low, and higher high. Now, when you have an uptrend market, okay, in any pair at all, okay, we should have like a higher high and higher low setup like this. If you look at it, you can see you have something like this, like you have something like this, okay, like this, like this, like this, like this, like a stairs, okay? It's like going up, down, up, down, up, down, right? Okay, you understand? You getting it? Are you understanding it? Are we following, please? Are we following? You're following? Okay, great. Okay, so now we have a higher high, higher low situation here because it's an uptrend market, okay? So now that we have this higher low and higher high put in place, okay, we'll need to have a horizontal line, okay? The horizontal line, the reason why we have this, okay, is for us to be able to, that's the second step now for the first phase. Okay, the first step is to know if the market is in an uptrend or in a downtrend. The second step is to now put in place higher high, higher low, okay, on both sides, right? Now, the third step is to get a horizontal line drawn like this, okay? All right. We have to have two horizontal lines like this, okay? So now we need to, these horizontal lines, the reason why we are doing to draw and use is because we need to, with these horizontal lines, we'll be getting our break of structure and our change of character, okay? These horizontal lines make us get these things in place, the BOS and the CHOCH, break of structure and change of character. So now I'm going to show us how that is done, okay? Now, in an uptrend market, after we've put in a higher high and a higher low, right? Okay. When we've put in a higher high, higher low like this, the third step is to get the horizontal line, two of these drawn, right? Now, we need to get our break of structure. The first horizontal line, we need to put it here, okay? On the previous higher high before the new one that we have above. Okay, why the second horizontal line, we need to put it down at the higher low, okay? That's the previous higher low before the new one, okay? Or sorry, the new higher low. That's where you need to put in your second horizontal line, okay? So now, at the moment, we've seen the first step, an uptrend market. Second step, putting the higher high, higher low in place. The third step, getting our horizontal line so that we can use the horizontal line to get our break of structure and change of character. All these three steps, okay, is still on the first phase of this strategy. Okay, we are still in the first phase. Now, we've drawn the horizontal line. Now we need to find our break of structure. Okay, so now the third step now is to get the break of structure and the change of character. Now you can see clearly that we've drawn the horizontal line up and down of this pair. Okay, now you can see the price went up. Okay, the price went up after just a moment. The price went up from here. Okay, you can see the brush tool I'm using, that's green in color. You can see the price went up here, crossed the previous higher high, right? Also crossed the horizontal line, which is on top, going up to this higher high, right? Now that's where we get our break of structure. So our break of structure comes after which we have put in our horizontal line at the top of the second to the first to the current higher high. Okay, that's how we get our break of structure. So now the price needs to come down, coming from, okay, from this level. Okay, the price goes up, crosses the horizontal line, comes up and creates the new higher high. Now this new higher high, right, is now the break of structure. Okay, the break of structure. Okay, that's the break of structure, right? The price needs to come from the higher low, go up, crosses the horizontal line, crosses the previous higher high to give us a new higher high. That new higher high is the break of structure. Okay, so now we have seen that we've gotten our break of structure, and that only happens when the prices comes from the higher low, crosses the horizontal line, and forms a new higher high, which gives us break of structure. Okay, so now I'm going to put the BOS here, BOS, break of structure. Now we have our break of structure. Okay, that's still the fourth step, okay, of the first phase of this strategy. Now we are now looking for the change of character. And the change of character, the only way the change of character can work, okay, is when you see price come from the higher high, okay, from the higher high, it needs to come down, okay, come down to cross the first horizontal line on top. It needs to come down to cross this higher low, okay? It needs to come down, cross the horizontal line below, down to this end to create a change of character, okay? So in other words, what I'm trying to say here is before we can get a change of character, a break of structure needs to be formed. The price needs to come down from the break of structure, all right? Crosses the first horizontal line, comes down, crosses the second horizontal line and the higher low, okay? Comes down and gives us a change of character. And this is the change of character, which is this, okay? CHOCH, all right? That's the change of character. Okay, you understand? We need to see price from the break of structure which was created above, needs to come down, cross the first horizontal line, comes down, cross the second horizontal line, and forms a change of character. Okay, so now we have the fourth step of the first phase, which is complete. Creation of the break of structure and creation of the change of character. Okay, so now our first phase is now coming to a completion. All right. Now, okay, let's clear all this we put in here. Okay. So now we have a change of character here. Okay. Which is CHOCH. Okay. Which is the change of character, which is here. Okay. So now we are still in the first phase. That's the fourth step. The fourth step is going to be creating of BOS, break of structure, and also a creation of change of character. That is the first step of the first phase of this strategy. Okay. Now we have the BOS down to change of character. The first step is complete of the first phase. Now, there's what we call a Fibonacci retracement tool, okay? The Fibonacci retracement tool helps us to measure where we can take our TP, our take profit, our stop loss, our entry level, also measures where we can stake it, okay? So now I'm going to draw the Fibonacci retracement tool. Okay, okay, so let's see, retracement tool, Fibonacci retracement tool. Okay, so now drawing a Fibonacci retracement tool, and as I always say all the time on my voice note, on my YouTube videos, and every time I say, if we are having an uptrend market which gives us a higher high, higher low situation, okay, we are always looking to sell the market anytime we have an uptrend market. Okay, if we have an uptrend market, we're always looking to sell the market. All right, so now we have an uptrend market which the USD JPY is giving us. So now we are going to be drawing our Fibonacci retracement tool from the break of structure down to the change of character because we are looking to sell this pair. Okay, so I'm going to show us how to draw the Fibonacci retracement tool. So we need to, let me try zooming so we can really see. Okay, so now you need to draw your Fibonacci retracement tool. Okay, from the top of the break of structure, right? You click there. Okay, you click once there. You drag it down to the change of character, to the low of the change of character, which is this. Okay, you draw it and you click there as well. Okay, so now if you see, we have the Fibonacci retracement tool, which is accurately drawn there for us. Okay, from the break of structure to the change of character. Okay, you can see it's drawn, right? So now we are still in the first phase. Now this is the fifth step, okay, on the first phase of the strategy. All right, now we've used the Fibonacci retracement to measure from the break of structure down to the change of character. Okay, so now we are going to be looking and waiting for the price from the change of character now. Okay, we need to see the price from the change of character move all the way to the 0.5, 0.618 area. Okay, these zones, this 0.618 and 0.5 are zones which we, after we drew the Fibonacci retracement tool, this tool gives us this zone where the price need to go to, right? The Fibonacci retracement tool helps us to measure, okay, helps us to make sure that the price gets to these zones. And the zones, if you look at the left-hand side, okay, where you see this green part, you can see the 0.618 and the 0.5 area. You can see the 0.618, you can see a line there, right? It's a red line, okay, down to this side. While the 0.5 is a black line towards this side, okay? So we want the market from the change of character, we want the price to go up and come into this zone. All right, the red and the black. It needs to come into this zone. This zone would activate the second phase of the strategy. Okay, this would activate the second phase of the strategy. Now we have 5 steps on first phase. Okay, we need the price to go into the 0.618, 0.5 zone or area for the second phase of the strategy to kickstart. Okay, so let me wipe all these ones away. I hope we understand, right? I hope we are following. I hope we are following, right? Are we following? Guys, are we following? Are we following?
Yes, please.
Okay, great. So now we see that the market from the change of character price, okay, gets into the 0.5, 0.618 area, this zone where you have the red line and the black line. And if you look closely, you can see the price also pushed towards that area. Okay, it pushed towards that area. Now, the second phase of the strategy would begin. So now you can see on the first phase, a quick recap. We have the first step, the second step, the third step, the fourth, and the fifth step. The fifth step is the drawing of the Fibonacci retracement tool. Okay, so that we have drawn, and now we can see that the price has gone towards that level. Okay, so now we are going to kickstart with the second phase of this strategy. Okay, so any question here you want to ask before we enter the second phase? Any question you want to ask so I can briefly explain? Okay, any question so we can push to the second stage, a second phase of this strategy? Any question at all? Any question? No question. Can we move on? Any question? No question. Okay, so we move on. Okay, so now we have the first phase finished. Okay, now we are moving to the second phase of this strategy. Now, the second phase of this strategy is where we have candlestick formation. With the candlestick formation, we are opportune to see entries, okay, either to the buying side or the selling side. And remember, this pair is an uptrend market, and an uptrend market, okay, we are looking to sell this market because any uptrend that we see in any pair means the market wants to sell. We need to wait for or process to be made or to pass for us to get to that level to buy or sell. Okay, now the candlestick formation works like this. Now, step one, okay, of phase two of this strategy. Okay, now, if you look closely, I'm going to zoom in so we can really see. Okay, now we saw price come from the change of character, right, up to the 0.5, 0.618 area. Now, we saw price come towards this level, okay? And what happened here? We saw the market came down, right, to this level, okay? You would say, why did we see this one? You can see a red, a wick on top, right? Which just poked his head on the 0.5 area. But what we are looking for here, we need the price to enter into the 0.5, 0.618 to be sure that the market is ready to give us an active candlestick formation. Okay, so that is why this red candlestick with a wick is not really valid. Okay, we need the price to get into the 0.5, 0.618 area for us to see a valid candlestick formation. So you can see the market came down, right? And what happened? You see it came up high. This movement was last week Thursday. Okay, we saw this movement last week Thursday, and I was waiting patiently for us to get in an active candlestick formation. And also another thing about the candlestick formation, okay, if we have an uptrend market, okay, if we have an uptrend market, and of course we are looking to sell the market, right? Okay, we need to be seeing a wick, all right, and a bearish flesh body. Okay, that I'm going to show you. I'm going to explain that to you. Now, if you look closely, okay, if we look closely, you can see we have a wick here, right? We have a wick here, okay? We have a wick here, right? And a bearish body here, okay? And you can see clearly that this wick and bearish body, okay, it's in this zone, all right? It's in the 0.618 area, 0.5 area, okay? So it's a valid candlestick formation. So that there goes our candlestick formation, a valid one which we'll be working on. Okay, that is why on Friday, on VIP members, you can see I told us we've been waiting for USD for a month for it to really actualize, right? And also we found this entry. The reason why I told us to take a buy on this trade was because we saw a wick and a bearish candle. Okay, we can see it was clear there, right? So now, moving on, okay. Now we have a wick, okay, and a bearish flesh candle. Okay, this is it here. Now, something again you need to know about the second phase of this strategy. Okay, remember, okay, we have time frames in the forex market. Okay, on TradingView you can see here we have 4 hours. Okay, now I do my setups with 4 hours time frame, okay? And I do my entries on 1 hour. 4 hours give you the bigger picture of what the market wants to do. You can see it clear enough, okay? I'm a day trader, I'm not a swing trader, okay? We make sure we do our setup on 4 hours, okay? And on the 1 hour, we shoot, okay? So now, right now, you can see all my explanation from the first phase down to the second phase. I was all through on 4 hours because that's how we work on our setup. Okay, so at the moment I'm going to share another meeting group link right now so you can connect back because we are already short on this, and 4 minutes time is going to go off. So I'll be dropping another link in a moment, okay, so we can connect back so I can really talk proper on this second phase of this strategy. You know, the second phase, okay, of this strategy is the most important one. Okay, you need to master it because this is where you take entries, and any mistake you're losing money. Okay, so you need to be very, very careful using this second phase, right? You need to understand the candlestick formation, how it works with the time frames. Okay, so now I'm going to send a link again to both groups. We're going to connect back, and I'm going to explain and break it down so we can really understand how the candlestick formation really works, because I want us to really understand this very well, because knowing this one, okay, it is going to be easy for us to take entries and take trades in no time. Okay, so I'm going to be closing this now, and I'm sending a link again. Connect back and we'll continue. Okay.